Hi, I'm Simeon Wallis, Chief Investment Officer of Aprio Wealth Management, and welcome back to The Pulse, where we take a month-to-month look at what happened to the economy and the capital markets so you make better decisions in your business and with your investments. The start to the month has been mixed. Smaller company stocks have outperformed on expectations of stronger earnings growth in 2026. For the quarter, stock markets are 2 to 5% higher overall, and returns have been great globally. Yet bonds have struggled as the Fed signaled slower interest rate reductions than markets wanted. And the story remains the same with oil and Bitcoin declining while copper rises. Markets are now pricing in one rate cut in the spring and one for the late third quarter, and then pausing. Real-time GDP now points to an economy decelerating into year-end. Now, on the back of the government shutdown, growth has been cooling but not collapsing, and that supports the softer rate cut path. One reason for the slow approach to rate cuts, real-time measure of inflation has been sticky and edging higher. And that's true for goods and for services. Now, copper is a key reason why inflation has been stickier recently. Copper, which is the lifeblood of wiring, has surged on the back of demand from the global build-out of electrification and AI infrastructure. Now, while other commodities have been mixed, copper has clearly trended higher. Now, potentially mitigating inflation over time is productivity from AI. Corporate adoption of AI has surged, with year-over-year growth rates fastest in technology, healthcare, manufacturing, and finance. Shutdown uncertainty and weak sentiment made consumers cautious. In-store traffic is down year over year, and online holiday sales, though up, are growing more slowly. We see this concern playing out in discretionary categories. Think electronics, furniture, travel, which are soft. Consumers are selective, favoring essentials and value. To sum up everything from today, here are the key takeaways. December has been mixed. Equities up, bonds under pressure, commodities uneven. Markets are now pricing in 2 Fed rate cuts next year, but sticky inflation keeps the Fed cautious. Economic growth is slowing into year-end, though still positive. And holiday sales are rising, yet in-store traffic and discretionary spending are soft. With that, I'm Simeon Wallis, Chief Investment Officer of Aprio Wealth Management, and I'll see you next time with our next edition of The Pulse.